Welcome to another edition of Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. Of course, Cattle Call is being brought to you by Wolf Auto, small town strong. Well, we had hoped that we would have seen some bigger money this week as we looked at the market trade, but in everything in agriculture right now, there's a lot of ebb and flow, and sometimes you just got to buckle up and go along for the ride. And that's where we're at in this cattle market. As market maybe has carved out a bottom. We're going to find out what's going on. Packer kills have even ebbed and flowed as well this last couple of weeks and couple of days. We've started to see a pickup once again. So let's dive into what the factors are in the trade as Brad Kooima joins us. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. And, I guess, Brad, you can't be perfect all the time. And we had hoped to see some at least steady higher numbers on the cash this week. And as of now, it's been very, very quiet. And I think that's where we kind of need to start out. Did we carve a bottom, though, in this trade?
All good questions. Thanks for having me on, first of all. And, thanks for throwing me under the bus. I appreciate that. No, I'm kidding. If anybody thought I knew what I was talking about, then I'll just keep talking. We'll remove all doubt of that, right? That I might have an idea. I don't know. I'm old enough and dumb enough to at least state an opinion on your show. And, obviously people know that sometimes once in a while, and maybe I'm right and maybe not so much all the time, obviously. But last week, I talked about, I thought that I was kind of getting the vibe that maybe we were going to catch on the cash cattle. I totally have. I'm not abandoned that idea here yet. It's only Wednesday. And usually when you get to the later, if you can hold out till Thursday, Friday, that usually is an indication of leverage in part of the feed yard. And so I haven't abandoned the idea, at least at the north. Might not see a little bit of firmness in the cash trade. The south doesn't feel like it so far. They don't do a great job of selling cash cattle, as you know. That's how I feel anyway. There was a handful of cattle that leaked today in Kansas at 197. That'd be $1 lower. I hope that's not representative of the trade. But yeah, I thought we were seeing some signs last week, and I'm going to stick to that story. I think where you're starting to see the last 2 days a little better kill, and I think that's something that you should have on your radar. The Packers slowed this kill way down, trying to gain some leverage back, right? Trying to get a boost into the box beef, which the boxes have had a couple of pretty good days now. And I don't know exactly where their margin line is, and I don't know if they're not going to tell me if I ask them, but all of a sudden, if you're buying cattle at 198 with the box at 314 or 315, I would guess that the margins probably are starting to get pretty close to being back in the black, and then we'll see if maybe they don't start to add a little bit of kill. I know in the case of one of the Packers, they are adding a few hours this week, which I think is a good sign. So, we're higher than we were last Wednesday when you and I were talking futures wise, not exponentially, but a little over $1. And still, looking at a chart, which I apologize, I'm peeking up at my April cattle chart here while you and I are visiting. From a chart standpoint, I think there's maybe a reason to have a little bit of hope too.
So talk about that April open interest, because we're getting to that point now. What are you thinking we're going to see?
Well, like it or not, the funds are a big part of our market, Susan. And I know it's frustrating for a lot of people, me at times as well. And I've become, I don't know what the right word is, a realist enough to know that I know how I feel about the funds, and they are what they are. And honestly, I'd rather be on their side as to try to think I can outsmart when they're going to do something, right? So for instance, the funds bought the hogs for 6 months, right? And everybody, they got to get out sometime. Yeah, right. After it went up $30, so you'd have been tired out trying to fight that story, and look at what the corn did with the funds getting along, so, but specifically to your point and question about what's happening next on the cattle thing. So, a lot of these index funds by rule have certain timing, right? Like everybody hears about the Goldman, but there's the Goldman Sachs fund, but there's many, many other funds. And basically they pick their poison a little bit as far as timing goes, but you'll start to hear about it already next week, I think, or maybe even a little bit the end of this week, where you're going to, huge open interest in the April cattle. They're going to have to move that position sometime. And so they'll start to do that probably maybe even this week into next week. And then certainly after the 5th business day of March, that's when it starts in earnest. So it'll be interesting to see how the April handles itself. There may have been some of it today. You can see that April was the weakest thing today. So with the funds needing to move some of that long April, we could see a little turbulence in the April cattle here for a little bit.
Well, we got to talk a little tariff chatter because we know that USMCA, which is something the Trump administration helped to put together. We knew that Saturday was supposed to start these new tariffs, and we kind of talked about this morning earlier on the air, and it was like, well, are they going to push it back to April 1? And lo and behold, April 1.
Are you getting tired of this tariff story? Because I am sick of it. Yeah. But it is what it is, and it's part of the market. And you flesh that out really nice. I mean, this is 4 days ago that Trump was like, okay, yep, Trump's where the tariffs are going to be on, like I said, and yada yada. And it certainly was impactful that day on the hog market and on the corn market. And now they've decided to back off again. I at some point, my futures market, our futures market here is going to go like, well, you know what? We're tired of blowing in the wind. Let's see what's, show us the real deal, and then we'll react after that. I do think the speculator is starting to tire of this story, but you're absolutely right. We've postponed the opening, and the market response was bullish hogs. We don't have to worry about anything, reciprocating coming out of retaliatory stuff coming out of Mexico, because we do sell them a ton of pork. And maybe a bit supportive on the corn thing, but we didn't really do much on the corn. Actually, that continuing to postpone the tariff is actually, I'd say, a little negative cattle. We do take a lot of slaughter cattle in out of Canada every week, and so that probably might have been a little bit of the influence too, why the cattle might have been a little bit lower today.
So looking at, we kind of led into it a little bit at the open when it comes to packer movement. We saw a few pullbacks happen in the last week, but now you say that the momentum is picking up again on the kill side, but and how much are these weights going to be weighing in as well on these cattle?
Well, if you're bearish and you're a cattle analyst, average weights are probably in your topic sentence. Okay, I mean, it's in the first paragraph. It's been the gorilla in the room for months and months and months. You get a little bit philosophical here, but you look at what's the function of the market or a market. Right now, what's happening here is the market's trying to figure out how to get by with less supply, less overall raw supply. So we have to create it, right? We've got less cattle, so we have to make them bigger to continue to fuel the engine for what the beef demand has been. So I'm afraid that this is going to be a bit of reality here for us cattle people for a while to come. I think that even when you talk to people buying feeder cattle, and this disturbs me a little bit, they're going to say, I'm going to buy this 600-pound calf, and the only way I can make it work is if I put 1,000 pounds on it, or whatever. Take your pick, 1,050. I mean, starting to project break evens into a 16 or 1,650 pound steer. So when we get to that wall, all of a sudden where we have one too many, it's gonna accelerate that thing. Now, the thing that was weird this time, I thought, was I think in the north we're about through our yearling crop, which is about a month earlier than normal. So one would think that the north's weights would really break. Last year, of course, they broke hard from the 1st of January on. But if you remember the weather, which you do, in Nebraska, it was a nightmare. Mm-hmm. So that contributed to it. This time we've had 4 or 5 cold days, and we hardly have had winter. So that still is a big reason why the weights are what they are. But so I'm not going to be quite so caught up in the weight story, because I think you still got to buy so many cattle. And I'm going to watch when that packer starts to get some margin back, but it's early. February notoriously is a tough time to sell middles, right? To sell the high priced beef. But we get to March and it'll start to get warmer. We'll start to project into April and Mother's Day and yada, yada, So maybe we got to chop wood here for a couple of weeks yet, but I think that there's hope is on the way.
All right. I'll go grab that axe and be ready to go. What's the best way for folks to get a hold of you?
Telephone is 712-722-0023, or check us out at kkvtrading.com.
All right, that's our conversation today with Brad Kooima. Quick reminder to everybody, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's a cattle call being brought to you by Wolf Auto, small town strong, right here on the Rural Radio Network.